In many ways, I still believe that this process of approving the ETF and having BlackRock be the biggest has ties to an ill-fated, I will say, attempt to control the market. I don't know if you've seen the clip of the guy who runs the Chicago Mercantile Exchange saying, "We'll tame Bitcoin." I believe the original plan was they were going to punt everybody else, give BlackRock the go-ahead. BlackRock was going to accumulate these big positions. The banks, the JP Morgans, et cetera, would take the other side, short the futures.
Today we have Morgan Creek Capital's Mark Yusko giving us his latest prediction for Bitcoin, as well as an update on the crypto market and what we can expect in the weeks leading up to the halving in April. We've seen a massive surge in interest in Bitcoin recently, with BlackRock leading the charge with the SEC's recent approval of the spot ETF, with many more sure to come. Bitcoin is currently sitting at just over $51,600, up almost $9,000 just in the last 30 days. Wall Street is now buzzing as we continue to watch the surge in crypto and the anticipation of major price movement in the weeks ahead. CEO Larry Fink, after recently changing his stance on Bitcoin, now praises the dominant crypto asset as a flight to quality, maintaining the protection it holds against currency devaluation and why it separates itself from the rest of the cryptocurrency sphere. Yusko is skeptical of Larry Fink's support for Bitcoin, as he knows the buying patterns and tactics of major players like BlackRock, JP Morgan, and Vanguard. In a recent interview with Sin City Crypto, Yusko gives his predictions on the relationship between the SEC and these major institutions, and how they attempt to manipulate the crypto market. Yusko also points out how their tactics have swayed regulatory decisions for BlackRock, at the expense of the other applicants. In this latest interview, he discusses the Bitcoin ETF landscape, and why he believes many large corporations aren't showing their full hand, and why we're in for a big surprise. He stands firm in his six-figure price target for Bitcoin, and believes the recent surge is just the beginning. Let's get into the latest interview with Mark Yusko, as he gives us his crypto price predictions and timeline for Bitcoin, and what we can expect in the days and weeks ahead. Also, our friends over at Jamie Tree Finance have launched an amazing 5-minute daily crypto newsletter, with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
For years, any commodity that has futures has been subject to manipulation.
Yeah.
Right? If in the old days, if I had a barrel of oil and I wanted to sell it to you, I actually had to have title to that oil. I had to be able to go produce that actual barrel of oil, deliver it to you. You had to have facilities to take delivery, and we could have a transaction. And then they created the world of futures. And now I can create a paper barrel of oil out of thin air, like literally there doesn't have to be any oil. And I can promise to deliver you oil. And as long as we settle up the transaction before the date, I don't have to go find the oil from somebody and buy it and deliver it to you on some tanker truck and send it up to Chicago. And so what happens is you get naked shorting on the other side. You can have naked long. You can get, creation of many paper barrels out of thin air. And what eventually happens in all these commodity markets is you get a big supply-demand imbalance caused by the creation of these paper commodities. And you've seen it in oil markets, you've seen it in grain markets, you've seen it in the gold market. I mean, the gold market is famous for this, right? All of the GLD longs, I shouldn't say all, many of the GLD longs are just offset by shorts from JP Morgan and Rothschild Bank in London, and they can manipulate the price of gold. And the thing I love about it is it was, oh, they're not doing that. Like, well, JP Morgan actually admitted to doing it. They actually paid a fine of $960 million, almost $1 billion 2 years ago. But I love their comment. They're like, yeah, we paid the fine, but we didn't have to admit guilt. I love that part. You can pay $1 billion and not admit guilt. But funny. We made 20 billion, so it's like a cost of doing business. I believe the original plan was they were going to punt everybody else, give BlackRock the go-ahead. BlackRock was going to accumulate these big positions. The banks, the JP Morgans, et cetera, would take the other side, short the futures. And part of the reason people think that the launch was a failure is that's precisely what happened for the first week. Right? You had the people come in before. We went from 40K to 47. We had that nice parabolic rise. And then you had the launch. And it was interesting, very underreported. I tweeted about this, but no one cared. There was a launch of a second futures contract precisely on January 11th, the exact same day as the approval of the ETFs. So you basically had a whole bunch of people shorting futures against these longs, and you had the liquidation of GBTC shares because they had high prices, and people who didn't have a tax problem were like, I'm out and I'll transfer. So you had a combination of factors that pushed prices down. People were like, oh, it's a failure. Like, no, you're missing the forest for the trees. You bring up the point, right? There are groups, Fidelity being one, and eventually all of them, have said, we're going to put in 1%. Now, Vanguard, Bank of America, Merrill Lynch, LPL this morning, UBS have all said, nope, this is still too risky. Now, what that is code for is Ms. Warren called them up and said, do not allow your client. If you look at the largest campaign contributors to Ms. Warren, you will find a stunning similarity to the largest financial services companies in the country.
Despite the obvious ties between certain major financial players and certain senators and regulators, the spot Bitcoin ETFs are positioned to benefit not just Bitcoin, but other cryptocurrencies as well. Yusko believes that at least 1% of financial advisors' portfolios will flow into Bitcoin, causing a massive surge in price this year. Fidelity is one company taking full advantage of this, investing 1% in spot Bitcoin ETFs, which will be huge for Bitcoin and the crypto market in 2024, as we watch more and more institutional investors come into the space in the weeks ahead.
My guess is, in the long run, and Eric Balchunas said this, right? He did the math. There's $30 trillion controlled by advisors at these big allocation shops. If 1% comes in to Bitcoin through the ETFs, that's $300 billion on an asset that trades about $10 billion a day. That will have a massive price impact. It will also solidify the long-term kind of penetration of Bitcoin into financial services. But most importantly, what it'll do is it'll sop up all of the incremental supply from mining for the next few years. And I made a big statement, and I might not turn out to be right, but I still made it. I believe this year, in 2024, more fiat will be converted to Bitcoin than all the previous 15 years.
Wow.
Which is not that big a stretch because, we've got about a $900 billion market cap. But most of that isn't money that came in. Right? When it was $10,000 price, about $10 billion came in through GBTC, and the price moved to almost $60,000. So much of that market cap is actually just price appreciation of the original hodlers and miners. And so I don't know the exact number, I probably should, of how much fiat has converted into Bitcoin since inception. But I think 300 billion, which could come in over the next year, would probably be close. It started, but it's the very, very tip of the iceberg, or that's probably the wrong analogy, but it's the very beginning of a wave. Think about, it's the butterfly wing flapping in Japan, and then you get a tsunami in California. I mean, it's literally going to look like that, right? There's this little tiny ripple in the water, and then it's going to start to grow, and it's going to start to grow, and it's going to start to grow, and it's going to start to grow. And eventually we're going to be talking, billions and billions of dollars every day that's going to come in. And, you got people saying, Saudi Arabia is going to buy 1 million Bitcoin. Okay, maybe. I mean, they might be smart to do that. I mean, they have an amazing stranded natural resource asset in Saudi that they could monetize if they got more involved in Bitcoin, particularly mining. And there are lots of corporations that are looking at what MicroStrategy has done and saying, I mean, we, to a much smaller degree, much smaller, we have on balance sheet Bitcoin in our fund. We run a Bitcoin fund, and we put Morgan Creek balance sheet assets in there. So I think that's going to become more and more of a commonplace thing. Hedge funds have been around. Most of them were using the futures. I think they're going to migrate eventually to spot. Some of them are sophisticated and they've already been in spot directly. They're probably not going to change. They've got big Coinbase accounts. But there will be lots and lots of other mutual funds, other ETFs, brokerage firms that integrate this. And there are institutions too, right? If Merrill Lynch, Bank of America Merrill Lynch changes their mind, which I think they will, and says, all right, we're going to include this in our model portfolios, it could go into lots and lots of products across their platform.
The crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of 2023's price fluctuations in pursuit of profits. Yusko's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. What do you think about Mark Yusko's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.